Last video, in first introduction video, we have been asked to couple of questions. I hope everyone answered, and your answers are with you now. First question was, have you invested anywhere? If for example, if you said yes, okay, if you said yes, the next question we have been asked was, where you have invested till now. That was a second question, to list out the product where you have been invested. My rough guess is you may be invested in a few products. Okay, majority of you maybe stated that you have been invested in a real estate, gold, bank deposits, postal RD, recurring deposits, insurance, Government of India bond. I think these are categorized as a safe havens, in the sense that there is no need of any risk. Okay, the zero risk involvement in this category of the products, financial products. Many of them may be having one or other investment in these products. Only few, I think we can count in a finger countable. They are invested in a equity and equity related products like direct equity, like shares, mutual funds, ETFs, exchange traded funds, or derivative market, invested in a derivative market, currency, or commodity market. Okay, then only few may be invested in a equity or equity related products. What is the major reason behind Indians are avoiding investing in a equity and equity related market is because of, the survey says, they are fear of losing a principal. They have a fear, in the sense, if I invested a lakh of rupees in a equity, I may not get even that lakh also. Forget about return. I will not able to get that 1 lakh rupees what I have invested also. But if I invest in a gold, at least I will get that 1 lakh rupees as it is. Even though if there is no return, my principal will be safe in a bank deposit, in insurance, Government of India bonds. Okay, that's why they have been called as a safe havens, and there is a zero risk involvement in a safe havens, and there is a risk involvement in a equity and equity related products. Okay, to avoid the risk of losing a principal, the Indians, or the majority of the investors, the 90 to 95% of the investors avoiding these category of the products. These category of the products. That is the one thing. Okay, the risk factor make them fear of losing a principal, in the sense whatever they have invested, that one also I will not get at the end of the day, in the sense end of the period, or 1 year, 2 year, or 3 year down the line. But at the end of the course, you will think that, okay, equity or equity related products can also be considered as a, not as a safe havens. We can say that, okay, there is a risk, but we can have a return also. We can prove that one, in the sense I'm not saying that your return will be 10 times or 30 times than the gold return, but we can prove that, okay, there is a risk involvement in these products, but we can also expect a better return compared to the other products also. Okay, that one we can conclude at the end of the course. That is the thing, because why the majority of the investors, your customers also, sometimes if you are working in any of the broking firm, your customers may be hesitate to invest in an equity. If you are saying that, okay, gold, buy one bond, Government of India bond, or insurance, they will be ready. But the moment you say that buy one equity Reliance share, or buy one Infosys share, they will say no, it will be, it is a risk, I don't want to be in that gambling. Okay, these answers are common. Even we personally also we do that. Okay, for that reason, I have been taken up this question to make you understand why there is a difference between these two products, and even in terms of return also there is a difference. We will come across with that things in a later session. Okay, now I would like to know about another two question I would like to ask you guys, okay, and answer that before playing a next video. The first question is about why investment is required. What you think that why we need to invest? I don't say that investing in a equity or equity related product. In general, what is the reason behind the investment? Okay, why we investing, why we are not keeping that money idle in a like any of the our own house or somewhere in our apartment, or we are not keeping them in idle. Why? What is the reason behind that? That's the first question, why investment is required. Second question, how to classify the investors? Okay, I am the one investor, you are the one investor. Okay, how can I classify, in the sense, what are the classification we have? You can search it in a Google and you can write it down, and we will discuss in detail about these two topic in a next video. Before playing a next video, kindly go through these two questions, write down your own answer, why investment is required, what you think about that investment is must, and second thing, how to classify the investors. Okay, in what basis you are classifying, in which basis you are classifying a investor. Just write down answers for these two questions will be discussed in a next video.